Alright, welcome back. So today is the day I speak about Goldbach, aka Enigma. Even though ICT doesn't like to admit it, this is the Enigma he speaks about. And I believe he doesn't like the masses to know about this because all the surround my bad. All the mystery surrounding I'm getting ahead of myself. All the mystery surrounding ICT will vanish. But that's going to be a topic for another video, another day. So, I need to give credit first. Goldbach in trading came to be by Hopiplaka. He is the creator. You can find him on X or Twitter, however you call it. And I'm also going to have a link to his Gumroad so you can get his book and read all about Goldbach because there's so much more we can speak about. But today, we're going to talk about Algo 1 and 2. So I hope you have a pen and paper with you because this video may be information overload. However, I'm going to do my best to simplify it and tie it all together so it all makes sense by the end of the video. I'm going to go a lot more in detail than other mentors that teach Goldbach. So, start off, what is Goldbach? So Goldbach comes from the Goldbach conjecture. It's a number theory. It states that every even number greater than 2 is a sum of 2 prime numbers. So in trading, we can split a 100% range into 2 parts with prime partitions. And these partitions is a way to potentially identify a meaningful price level. So, let's give a little more detail. A price movement in a range is considered 100%. A 100% move. So, 100 is an even number. The Goldbach numbers for 100 can either be 3 plus 97 or 11 plus 89 or 17 plus 83. There's a lot more. It's basically saying that these numbers are correlated. They all add up to 100. To give a small illustration, so basically, in a Goldbach dealing range, when we see a, let's say, an 11, when we see price, use an 11, we can expect that 11, the price from 11, go all the way up to the 89. It's a nice way to anticipate price movements and where they will go. So, first thing we need to say is Goldbach in trading is not subjective. This is the most important part about Goldbach. Any trading method that you use is subjective. It can be ICT, supply and demand, support and resistance. Everybody has their own way of drawing trend lines, of course, their own way of doing things. However, Goldbach is not subjective. So Goldbach likes to use the current price and put into a formula. I can't say that formula in this video because I'm giving away too much detail. And if you want to know about the formula, just go purchase Hopi's book. So, this formula uses price. It plots out levels that price may go to and is correlating with. So, let's see what it looks like. Well, first of all, in case you don't have it, you're gonna go to indicators and just put in Goldbach. The one I like to use is the DMN's Goldbach by FX DMN. When you first load it up, you're gonna see a bunch of boxes, colorful boxes and stuff, because all these boxes will be ticked in. So I like to untick those boxes and just keep the Goldbach levels and the DRs and Algo. This is just this little window right here. It shows you all the PO3 numbers, well, not all of them, but the most significant ones. And it also tells you the sequence of the algos. So in a Goldbach dealing range, this is where you're going to see. You now have a low, an EQ, and a high. Above the high and the low, it's going to be an extension. This extension is very important. You'll see why. And between the low to the EQ is going to be partition numbers. So write this down real quick. At these partitions, you can expect PD arrays to form in its appropriate zone. So basically, it's a rejection block zone, order block zone, fair value, liquidity void, breaker, and mitigation block. In these zones, you can expect to find its PD array. For example, in the FEG zone, you can expect to find an FEG. Just to give the same illustration as before, when we're using Goldbach, let's say this 11 right here has been hit and used. From this 11, we can expect price go all the way up to 89. This is known as Algo 2. I'm going to go over that in a little bit. So, let's go over the algos, right? Algo 1 and 2. So I'm going to do my best to simplify this. In your notes, put Algo 1 equals MMXN. Algo 2 equals trending. So of course, in an MMXN, we can find trends. That being said, I'm going to say that Algo 1 and Algo 2 go hand in hand. They are separate, but they go together. And you'll see why in a little bit when I go over the real data examples. So in Algo 1 and Algo 2, we expect price to form a sequence in its structure. Just like how up here, we expect price to come into the range, touch the 11, you go to 89. This is a sequence. It's coming to the FEG zone, going up to the opposing order block zone. So here are the sequence for Algo 1 and Algo 2. Algo 1, as you can see down here too, you're always going to have it down here. But it's best to write it down in your notes so you have it memorized. So it's a lot easier to see with just your eyes, the more experience that you use this. So Algo 1 is high-low to the order block, to premium breaker, to premium rejection block, premium FEG, back down to discount liquidity void. This is a bullish scenario right here. Or it's a full MMXM. You'll see why in a little bit. Algo 2 is rejection block to breaker, FEG to the opposing order block, premium mitigation, and the premium liquidity void. So, Algo 2 is another variation to this. From what I've seen in my own trading, you're mostly going to see a high-low at the Goldbach and X. You're going to see price. Thing is, most people look for price to go from rejection block to breaker. But the thing is, not every Goldbach trade is picture perfect. Nothing is picture perfect. So it might go over the breaker zone and go to even the premium zone. You'll see one in an example soon. However, the most important zone is the FEG zone. The FEG is important. And from the FEG, you can target any other Goldbach zone. I like to target the EQ or opposing order block. So basically, I'm gonna give. No, I don't need to illustrate this. I can just show it to you on the actual range, right? So don't mind these candles here. So we're looking at price inside of this Goldbach dealing range. And then Algo 1, we can expect price to come into the zone. Use the order block. Go to the breaker zone. Consolidate around here. And then go up to rejection block. All the way up here to 97. Expect a retracement. Use the FEG zone. As you can see, FEG, very important. And all the way down to this liquidity void. This is Algo 1. But you can also see it as an MMXM, right? Because sometimes price won't even stop at the liquidity void. It might just come back all the way down here. So, I'm sure, as you all know, this is the buy side curve, and this is the sell side curve. This is how I like to visualize Algo 1. On Algo 1, I don't really like to look at the specific points. You can, and it will work in most cases. But Algo 1, I like to see as an MMXM. From the low to the high to the low, or the high to the low to the high. So Algo 2. The trending model. So here, you can expect price to enter you come up to the breaker zone. From the breaker zone comes to the FEG zone. From the FEG zone, you can expect price go all the way up to the opposing or the premium order block. And here the rest of it will be premium mitigation and end at the premium liquidity void. However, of course, if you're in a trade, you're going to want to take out here, right? The order block. So the order block you want to see as a terminus. Just like the variation of it, price could do this too. Go to another zone and then come back all the way down to the FEG zone, test it, and then continue. This is what you will mostly see in a trend. So, how do you find the current dealing range, the current Goldbach dealing range? So, when you go to your indicator, it's the first method. Just click on the auto PO3 number and put it on closest. It will put on the closest Goldbach that is being used. So as you can see, I put it on right here, right? The 81 is being used. You can see how the high is being respected. And keep in mind, gold has never ever been at this price point. But Goldbach is saying that once it hits this high right here, there will be a retracement or reversal or consolidation. You can already see how powerful it is. This candle stopped exactly right at the high. You can see that this high is highlighted in this little box right here by 4 different PO3 zones. That's how you know that the high or low, when it's shared, is strong. So, write this down. A shared low in an uptrend is strong. And vice versa. A shared high with the PO3 numbers, shared through all of them, and a downtrend is strong. So of course in an uptrend we don't really want to look at the highs of Goldbach. We want to be looking at the lows. So how do you know if the Goldbach PO3 zone that you're using is actually working? So as you can see, the 81 on the weekly time frame is too small, right? So let's go to 729. You can see here, and if you have a sharp eye, you can see already an Algo 2 forming. Here's the low, and it goes straight to this breaker zone. Let me highlight that zone. All of this is the breaker zone. You can see price came straight to it right here, and then rejected. Where did it go to next? This FEG zone right here. This candle wicked into it and closed way above, rejecting it. So from here, what can we expect? The price to go all the way up to the order block. So if you're seeing this just in time, this is basically a weekly analysis for free. But as I said a little bit earlier, one of the best places to take your profits at is at this EQ level. Why is that? Because at EQ, you can expect consolidation. This is the equilibrium of the range. So here, price can tap into the EQ, and then there it can decide, do you want to keep going up or do you want to keep going down? So I like to preach the method of FEG zone to the EQ. But of course, if you're very confident in your trade and you know what you're doing, target the terminus. I do want to say that on the lower Goldbach PO3 ranges and a lower time frame, this scenario will happen a lot more frequently. On a higher time frame, you're going to see that the EQ is very, very strong. Of course, on a lower time frame too, but of course, on a lower time frame, the EQ can be expanded through easily. So I just want to give a couple pointers out on Goldbach. So the thing is, with Goldbach, that a lot of other mentors don't speak about is a bias change. So this is your high. This is your EQ. This is your low. And then at the high, you have an extension. Make that orange. So this is the Goldbach high extension right here. And the Goldbach low extension right here. So let's say the price is heavily bullish. And let's go straight to the extension. When you see that price has expanded through the extension, that is a bias change. Here, if you want to further confirm your bias change, is a little sauce. The FEG zone inside of the Goldbach range is going to be the extension of the next range. So this is your FEG zone, right? But once this high turns into a low, because price expanded through it, you want to see price come down into this extension. Here, let me get rid of this one. Just use this. Use extension, and then continue. Another thing I want to add is, which is actually very important, put a star next to this in your notes. The extension test equals an algo starting. You'll see an example of this very shortly. But if you see that price came out to a high and did not break it, let's say it came around here. Has not expanded through the extension and we tested the extension inside of the dealing range. This is no bias change. Because here, price could just use the extension and then start another scenario. Oh, I could do it like this. Oh, nice. I didn't even know you can use the backspace there. Alright, so let's go on to real data. There's a couple examples I would love to show here. So, let me turn off this Goldbach real quick and go back in time. In this area right here, what do we see? It's actually one of the most important parts about using Goldbach. You just don't want to use Goldbach all willy-nilly. You I want to have context behind it. The context is here. Price is an option, right? We have a weekly fair value gap. The magnitude on 2, so it's nice and precise. Now here what we're expecting, as in MMXM. Expecting ERL, IRL type of scenario. So this is your IRL, your FEG, and these highs right here is ERL. We're expecting price to be bullish with context. But what would you say if I told you that at this low right here, I knew that the MMXM or the buy side curve is going to form? You might think I'm bullshitting, but I got some receipts to show you. So let's go to my Telegram real quick for my mentorship students. Every week I like to give my students a analysis on gold, because I've been trading gold for 5 to 6 years now. So I told them there's a nice weekly FEG, and here's this. I have the Goldbach on, and I have lines literally telling them this is sell side curve, this is going to be the buy side curve. How did I know that at this exact low, a buy side curve is going to form? Say right here, Algo 1 MMXM. May start in Algo 1 MMXM as Goldbach low has been touched. So let's go back to the chart. So at this moment in time, I knew that gold was running on the 81 power 3. There it is. So what do we see here? We can see an extension test right here. What does this mean? The algo starting. So all of this, to me right here, was just liquidity building up for the buy side curve. So from this high, as you can see already, oh, I'm sorry, go back a little bit. See already how the bodies, the candles, are respecting this high and its extension. It didn't go through it, so at this time it didn't give a bias change, and it gave sales. Down here, we're inside of the weekly FEG, and we have a Goldbach low right here. And here's extension. This extension was not expanded through, so there's no bias change. My bias was the price is going to form the buy side curve from here. I saw that the Goldbach low was rejected. Let me clone this real quick. Give a very nice visual to MMXM. So here's Algo 1. Algo 1 was confirmed because of this extension test and because this low was rejected. This is what told me that Algo 1 MMXM was about to start. So of course, like I said, Algo 1 and Algo 2 go hand in hand. You will find Algo 2 inside of Algo 1. So this is the 4-hour chart, right? This is a macro time frame. Most people don't trade or enter on the 4-hour, right? So how do we get into this trade? We know that buy side curve is going to form. So just like price, Goldbach is fractal. So if we go down just a little bit, Let's go down 1. Go down to 27. And then go down the time frame. Let's go to 10 minutes. What do we see here? You just gotta let the indicator load. Okay, there we go. Here, we can actually see a fractal MMXM forming. Just like I said, look at all of these extension touches. None of this was telling me that price is going to find a buy-side curve here. This was telling me that price is going to drop. But I didn't want any of this because price is an uptrend. I don't advise to counter trend trade if you're a rookie, especially. You mostly want to go with the trend. The trend is your friend. I know most people like to say the trend is your friend until it isn't. However, I'll tell you real quick, in most of my trading career, a lot of money that I've made is from following the trend. I think people just want to sound smarter than they actually are. You can say that they counter trend trade and all that stuff, but catching a retracement is not as good as catching a whole trend, isn't it? And why would you catch a little small retracement with huge lots? If you could just put a small lot and a big trend and worry less. You gotta think about your mental health, right? But nonetheless, going off of my rant right there, let's talk about the algo. So what do we have here? We have a confirmed Algo 1 MMXM forming. Inside of this Algo 1, there's an Algo 2. Bringing back the sequence that I spoke about earlier, it can go from the higher low to X to the most important zone, the FEG zone, and then stop where you want it to stop, at the EQ or the opposing premium order block. We can see it here. This low, confirmed, right? Low. Price went all the way up. It came right here to the breaker zone and rejected, but it didn't come to the FEG zone after. It came right up to this liquidity void. So this is X for me. After X, to expect FEG. You can see price perfectly retested the FEG zone. This 17 line right here, perfectly tested. That's Enigma right there, guys. And also, like I said earlier, you want to find PD arrays in its appropriate zone. So what do we have here? We actually have an FEG inside of the FEG zone. Try to grab that. So this right here is your Algo 2 FEG. It's wonderful, isn't it? Very easy to see. Oh, I do want to say this too. Algo 2 is easier to see, and in my opinion, stronger. Because the thing is, you don't need an Algo 1 to be forming to use Algo 2. Algo 2, you can see it in many different scenarios. So let's just say you entered at a FEG zone, right? Blindly. Because you're very, very confident in your Goldbach trading. I like to teach my students, put your stop loss at the low of the structure. I know there's another mentor I like to teach at the low, which I actually don't find effective, because price can always just come down to the low again and then start the algo. This can happen. So if price is around the structural high or low, near the extension, it's even better. Or if you're very, very cautious, just put at the extension. Because obviously, if price comes down to the extension and expands through it, what is that? That's a bias change. So you're obviously wrong, right? So price can do this. Touch the low, continue. Price is volatile sometimes. And especially gold is too. So here, you targeted the EQ, right? And just like that, 90 pips. You would wait a whole week for that on EU. Or even better, you're confident in your Goldbach. You put it at the order block zone, the 89. That's 194 pips. You put a one lot on this, you're gonna come out with nearly $2,000. And what? Let me see. 3 hours. 3 hours, $2,000. You know how many people wish for that? We're blessed here, guys. We're very blessed. So that's a very nice Algo 2 that formed. I think there was another one that formed the next day. Oh, it's another lesson right here. So, say this is your high, this is your low. And this is your EQ right here. When you see that price first comes into a range, here you might start thinking, is this going to be Algo 1 or Algo 2? My first piece of advice is to let the extension be tested first. Oh, what the heck? Changed both of them. What the heck? Okay. Let the extension be touched. And then it will start the algo. The price can also come to the high, and it might even come down to the rejection block for Algo 2. So let price come into the range first, okay? Let price come into the range, and then give clues. Biggest clue is extension test. This is your best clue right here. So, price turned a high into a low, right? Here, people are already entering just because of this gap, the ICT retail traders. See, look, oh, CE has been touched, otherwise it's going to go up. No, not yet. Goldbach says the low is down here and extension is down here. So, let's see what happens. Look at this. Look at this candle right here. Isn't that staying above the low and rejecting the low? It's beautiful, isn't it? But hold on. Let's wait for another clue. Alright. Okay. You see it right here. This actually goes back into what I was saying. Let's go back a little bit. And put it towards this candle. Like I said, the FEG zone is the extension for the next range. It's going to be this line right here. This is your extension right here. So we already know for the bias change, extension, expanded through. Okay, that's part one. Extension down here, tested. So let's see what happens after this. Oh, it goes straight back in. Isn't that wonderful? That's to the pip right there, guys. This is Enigma. So, some more clues, right? What do we see here? In this order block zone, we can see a beautiful order block was formed. Sometimes you will see that the order block is perfectly within the zone, but sometimes it'll be abstract like this. But of course, like I said, not every trade is going to be picture perfect. What else do we see? We see this beautiful FEG inside the FEG zone. Again, guys. This just happens over and over. This is your Algo 2 FEG. So let's say you entered right here, right? The FEG has been tested. This little breaker area right here of this order block has been tested. So we're expecting a buy. Let's say we bought right here. Put the stop loss at the low, TP at EQ. Just a small trade, 1.1, it's 88 pips. Let's see what happens. Straight to it. Went straight to the EQ. At the EQ, what can we expect? Consolidation, right? Let's see what happens. Yep, consolidation. All of this is just a consolidation. So let's say you put your TP at the terminus at 190. See what happens here. Obviously, it's going to touch it, right? You can already see the suspension. Just like that. Finish the Algo 2. As you can see, Algo 2 is a lot easier to spot and trade. So let's look at the macro. We can see that the buy side curve is forming, right? Let's see how it looks on the macro time frame. Let's put it back at the 81 because we're on a higher time frame. Perfect. Look at this. The perfect MMXM. High to the low, low to the high. Let's see this finish. Boom, like that. Finishes right here. Let's get rid of these. And then I want to show you another example as this MMXM has been completed. So let's go back to current day. And let's talk about what we saw in the weekly time frame a little bit earlier in the beginning of the video. This is your weekly time frame, right? On the weekly, I was using 729. So we already know Algo 2 is forming here. But what else can we see? Let's go to the daily. I'm going to go down just a little bit to the 243. Because I think this is where I wanted to show you. That at this high right here, let's go back in time. There it is. This high right here perfectly tested the high. Here's another Algo 1 MMXM. So you can see the high, the low to the high. But for the Algo 1, the terminus is at liquidity void. Like I said, there's variables. It might come down to the low or it might stop at the liquidity void. So right at the liquidity void, this is your Algo 1 MMXM. But let's say you didn't want to be part of this slow slide and you didn't enter any of this. The liquidity void is where Algo 1 terminus is at. So what follows after, right? We want to see this liquidity void be used to continue, to keep going. So let's go down to the hour 4. It's a bit easier to see. What are we going to see here? We can actually see that there's an Algo 2 inside of this whole Algo 1. So Algo 2, as I like to say, well, first of all, I want to point this out. This right here is your extension test. We already know that this means the Algo is starting. Just like that. what if I told you that this is a huge algo 2? Here's the low, right? Here's your X. Put this on algo. Came down. So in this liquidity void area, specifically, where did the price end up at? This FEG zone. You can see it to the pip right there, guys. Right there. Let me move this little area. Right, there it is. The test. So if we have a bullish algo 2 in mind, what can we expect from here? Bullish price action, right? Let's see how it finished. And just like that, from right here, where the FEG zone was at, price expanded up. So higher or low, X, bring it back over here. Like I said, price can go all the way past the breaker. You can see price, grab this one, came to the breaker, but never came back to the FEG, right? This FEG was unmitigated. There's also a nice FEG right here. There's a liquidity void right here too. This is all buy side. There's no sell side. Isn't that funny how this liquidity void in the liquidity void section, how this FEG starts from the FEG zone? Is that coincidence, guys? No, that's Enigma right there. This is ICT secret. So higher low to the X, and then FEG thereafter. And from there, expect continuation. Put it right here, the order block. Let's do that again. Let's see what happened. Perfectly. Went straight through it, guys. Alright. I hope you guys learned something today. I hope you guys liked it. Just let me know if you like it or not. If I need to go a little bit more in detail about something, just let me know in the comments. Or you can hit me up on my social medias. Alright, I think that's everything I need to talk about. I hope you guys have a good day, and peace out.